Hey guys, welcome back to the channel. Well, today was exactly what we talked about yesterday. It's exactly what we've been talking about in this channel for the last few days. It was the ultimate pressure test for weak hands. This morning, the headlines tried to shake the tree and move out investors with weak hands with a divided Fed vote and more macro noise in the market. But if you held the line today, you saw the memory sector yet win again and put more money into your pocket, put more money into your portfolio. Plus, we just got the data from the big hyperscalers. So Microsoft, Google, Amazon, and Meta, they all reported and they all reconfirmed their commitment to this sector, reconfirmed their commitment to CapEx overall and the pricing power that we will see with the memory sector moving forward. It just wasn't a beat for them today. It was a structural green light for the entire memory sector. And while the retail crowd is still worried about interest rates overall, the hyperscalers are continuing to write billion-dollar checks for the hardware that we track on this channel. Tonight, we're going to break down the performance of the Titans, the massive after-hours moves that we're seeing across the sector right now, and why tomorrow's final piece, the Western Digital and SanDisk prints that'll hit after the close tomorrow, why they will mean so much to the sector. But if you haven't done it already, make sure you hit like, make sure you hit subscribe to this channel. We're trying to get to 8,000 subscribers by the end of the month, which is a couple days away. We need 400 more. If you like the content on this channel, if you haven't subscribed yet, do me a favor, take 1 minute and subscribe to the channel. Let's dive in and talk about what we saw overall in the market today. Guys, first of all, let's just jump into the stories that we saw across the board. So let me just show you in the Wall Street Journal. You can see across the board. First one, Meta. Meta reports big revenue jump and projected spending increase. As I scroll down, right here in the middle, Microsoft reports strong cloud growth, but questions about AI returns continue to persist for this company. Right to the right of that, Amazon posts double-digit growth anchored by booming web services. And finally, right here in the middle, Google profit jumps 81% as cloud business booms. I want to just dive into a couple of these just to show you the commitment overall. But you could see Microsoft is calling for $190 billion in 2026 if their CapEx spending based on soaring memory prices. If I scroll down here, you can see right here, CapEx will reach $190 billion this year due to soaring memory costs. And I think if you go down here, the piece we were all looking for was the Azure cloud growth that they saw. We were expecting a consensus of about 37%. You can see the growth was between 39 and 40% this quarter for Microsoft. So beat estimates overall. And if you keep going down right here, you can see in forecasting the $190 billion in CapEx for 2026, which will be up 61% from 2025. And their CEO mentioned on conference call that she anticipates a $25 billion impact from higher component prices. That it means memory, the components that are going into this. That's what's driving the pricing power that we're seeing for the Fab 4, for the memory titans we track on this channel. And let's jump over and take a look at this one here. You can see investors still trust Google more than Meta when it comes to spending money on AI. If I scroll down to a part in here, I want to call out right here. Google on Wednesday updated its 2026 CapEx guidance to range from 180 to 190 billion, up from the previous estimate of 175 billion to 185 billion. And their CEO mentioned the CapEx is expected to significantly increase from this year's figure. The spending is coupled with revenue growth of 20%, the fastest for any quarter since 2022. Their cloud revenue soared by 63% today. And Google said it has a backlog of 460 billion, nearly double where it was last quarter, all because of demand for AI infrastructure. Right below, you can see Meta also increased their CapEx guidance for this year between 125 to 145 billion. It was up from where the range was prior. And this move is due also, look right here, reflects our expectations for higher component pricing this year and to a lesser extent, additional data center costs to support future year capacity overall. Guys, this is exactly what we thought we would see. And those levels, what we're seeing is the commitment, the CapEx commitment, the component cost increase, that's all driving pricing power for the memory companies. When we see Google revenue growth by 63% in this quarter, they're not just building data centers to look at them, these hyperscalers. You know that. They're filling them with silicon as fast as they can buy it. When Amazon tells you that AWS is growing at its fastest pace in 15 quarters, they are telling you that the storage supercycle, that the storage capacity, the memory supercycle that we track, what we saw in the Seagate numbers yesterday is officially a global phenomenon. The buyers are desperate for this capacity. But here's the detail that the mainstream media is missing. It's not just about how much money Microsoft, Google are spending. It's about where that money is getting stuck. We are seeing a fundamental shift from HBM3 to HBM4 architectures in 2026. And the entire year's supply is already pre-allocated. When you see Western Digital tell the market that they are 100% sold out in HDD capacity through the end of the year, they are telling you that the AI supercycle has moved from a demand story to a supply chain hostage situation. We are seeing contract prices for DRAM jump 50% in a single quarter because the whales are literally fighting over the last few wafers in the line. That is why the dips are getting bought so fast that we see in the market right now. It's not speculation. It's a race for physical inventory. CapEx for the hyperscalers right now is projected to hit $622 billion in 2026, up roughly from $379 billion last year. We aren't just seeing a bump in spending. We are seeing a $250 billion increase in a single year. Half of that is going to the GPUs, but the other half is going into the body of the AI factory, the high-density NAND and the HBM memory that we track on the channel. The big three that I call it, Microsoft, Google, Amazon, they're essentially pre-funding the next 3 years of growth for the memory sector. This isn't a cycle anymore. This is a global allocation race. The buyers are telling you they have price elasticity. They must have the storage and the memory, and that's why I'm not worried at all about a 2% dip on a Fed headline. The physics of this spend is just too big to fail. Now, I want to drive over and take a look at what we saw specifically with the memory stocks today, what we saw with the memory titans in the market overall. So let's jump over and first take a look at Micron. And guys, you can see Micron's day overall. Micron closed at 518.46. Up just about 3%, 2.881%, a little over $14 on the day. But look in the pre-market right now, moving again about another 1.25%, up $6.34 right now, tracking towards $5.25 a share. You can see their range overall here today to the right. Had to hit a high of $5.31 today overall. Strong day for Micron, great bounce back from where we saw. Let's take a look at SanDisk. Another strong day for SanDisk. Closed just at 1,064, just over that. Had about a $62 gain on the stock, over 6%. If you look in the after hours, they're tracking towards the 1,100. This is another huge psychological level for SanDisk. Picking up $31 in the after hours in the pre-market, about a 3% growth overall. We see today, if you look to the right, they did hit over 1,100. We actually hit a high of 1,103, a new 52-week high for the company. And with their earnings coming tomorrow, we have an opportunity to see either one of two things. We could see a little pullback, pre-earnings running up, or we could see the numbers that we expect with SanDisk to smash the quarterly revenues, to smash the margins, the pricing power, and we could see this stock move again up towards some of these price targets we're seeing in the market right now, which are over $1,200 a share. Let's take a look at Western Digital. Western Digital up over 5.5% today, almost a $22 gain, just closing under $413 in the after hours. This storage titan picked up almost another $15, almost another 4%, just over 3.5%, tracking right now to about $428 a share. You can see from the range today, it actually got up to about $442 a share on the day. And finally, Seagate smashed it today. We saw it yesterday. We saw it in the after hours. We saw it coiling, getting ready to strike it at the opening bell today. It's exactly what it did. Put a $64 gain, 11% growth on the day, closing at $643.30. If you look in the pre-market right now, another $10. The stock is over $654, about 1.5%. But look to the right, the daily range, $3 short of $700 a share. I did hear some price targets coming in today. Let me see if we're on here. New price targets for Seagate. Let's see if they've popped on here. So right here you can see, look at this, 800. All of these are brand new today. Look at the differences. Price target down here for TD Cohen from 500 to 850. Wedbush from 700 to 825. Bank of America Securities from 700 to 840. Cantor Fitzgerald 700 to 1,000. And then the Fox Advisors is a new price target set at 800. Significant upside across the board for Seagate. Massive day overall. And out of curiosity, I just want to see if the other storage player jumped today. So hang on here. Let's see. We've got some new price targets this week. Earlier this week, newest one kind of came in. We got a 530 and a 500 from Wedbush and Cantor Fitzgerald. So significant upside as well for them. So guys, massive moves with the memory sector today overall. These guys moved today. It was awesome to see the validation in the sector today. Huge moves across the board. So I think when we go into tomorrow, the April 30th tomorrow will be the grand finale for the sector, with both Western Digital and SanDisk reporting after the bell. We're seeing Western Digital right now sit about 412, pushing 430 right now in the after hours. Analysts are looking for a 75% year-over-year jump in earnings per share for the company. But here's what I'm watching for tomorrow. I'm looking at the margin. Seagate just showed us a 47% margin the other day. If Western Digital and SanDisk confirm they are seeing the same type of pricing power in NAND, enterprise SSDs, and HDDs, the undervalued argument is over. Even at these prices, the forward PE right now is still in the low 20s while earnings are doubling. The stocks aren't just overextended, they are being discovered right now in the market in real time. And I'm seeing a lot of comments on the channel and getting questions from viewers about the vertical charts that we're seeing with Micron, SanDisk, and the other memory players, and feeling that nosebleed anxiety, worried that we are overextended a bit in these stocks. But here is the professional reality. You cannot judge an AI infrastructure play by a price chart alone. You have to judge it by its earning powers. When you see Seagate printing 47% margins and Microsoft admitting that they built a $25 billion memory tax into their budget, the math has to change for these players. If a stock moves up 20%, but the projected earnings move up 50% because of the supply chain hostage situation, the stock actually just got cheaper on a forward PE basis. We aren't chasing a bubble. We are witnessing a structural repricing in real time, where the memory titans are finally being valued as the high margin utilities of the AI era. These aren't just hardware stocks anymore. They are the gatekeepers of a $600 billion hyperscaler build out. So what does it mean for us at the opening tomorrow? I think we have to look at the tape. The fact that Western Digital and SanDisk are gapping up 3-5% in the after hours before they even report suggests that the whales are front running for a massive beat. They saw Seagate's data the other day, and they heard the Microsoft and the other hyperscalers' CapEx commitments today, and they are positioning for a sector-wide breakout. Now, we could see a sell the news dip tomorrow. It absolutely could happen. It's a mechanically healthy for these stocks and for the RSI to cool off a bit. But don't mistake a tactical pullback for a change in the trend. Tomorrow after the bell is the big one, as I said, with Western Digital and SanDisk and their earnings and their prints hitting the street. I'm going to be watching the volume for those stocks, and I'm going to be looking at the early morning candles to see if the institutions are still loading up or if we're finally starting to see a bit of an exhaustion. If Seagate's playbook repeats tomorrow, the floor for this entire sector is going to move up permanently. I'll have the breakdown of those numbers as soon as they hit the tape tomorrow night. Until then, stay focused on the levels, ignore the noise, put more money back in your pocket. These stocks are poised to move. Make sure you're positioning yourself right in the moment right now. Make sure it fits the risk tolerance for you. But it was a great day in memory stocks today, the memory sector today, and the hyperscalers just committed overall and showed us the level of support they have for the build out and the pricing power that we will see with these stocks moving forward. Guys, I'll see you tomorrow night. I hope you have a great evening, but let's enjoy this one we had today. Take care.